Speaking at an event earlier this week, Christine Lagarde, President of the European Central Bank, said that in 2022 and 2023, certain sectors had taken advantage of a mismatch between supply, pushed down by bottlenecks, and demand, enhanced by recovery. This prompted the companies in these sectors to raise the prices of their services. However, Lagarde added that some of these companies had increased prices more than the required extent due to the cost push. In economics, this type of price rise is called seller's inflation or seller-induced inflation. During periods of distress in the global economy, businesses are usually subjected to a lower supply of raw materials, among other factors, which reduces their margins and ultimately profits. To tackle this, these companies increase the prices of their products, leading to higher inflation in the economy. This inflation, induced by price hikes by the sellers, is called seller's inflation. In recent times, this was widely seen in sectors like FMCG and automobile during and after the COVID-19 pandemic and later the war in Ukraine. The supply-side constraints in raw materials and semiconductors pushed companies to increase the prices of various products ranging from biscuits to cars. However, this is not the only reason an economy might witness seller's inflation. Several times when a company enjoys a monopoly or considerable influence, it may use the power to push prices upwards. In many other cases, some big companies in a sector form a cartel and artificially increase the prices of their products. An example of this is OPEC deciding to cut oil production, thereby reducing supply in the market and thus increasing prices. In a research paper released earlier this year, Isabella Weber and Ivan Wazner, both faculty at the University of Massachusetts, said that firms only raise prices when they are confident that their market shares will not be harmed. Moreover, in these cases, the prices do not decrease as quickly as they rise. In the research paper, the scholars said that reducing prices is a means of last resort for these companies. If the demand falls due to sellers' inflation, these firms respond with increased advertisement and product innovation, not price cuts. In March this year, a former Deputy Governor of the Reserve Bank of India, Viral Acharya, said that the top 5 private firms in India charge higher prices from their customers as compared to their customers. According to Acharya, this is due to a sharp rise in industrial concentration and is pushing up core inflation in the country. Acharya also suggested that the 5 conglomerates should be dismantled to keep inflation under control. In her address, Lagarde said that the competition authorities should look into the inflation-inducing behavior of these companies and scrutinize the legitimacy of these practices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.